here with Griswold Group, excited to fill you in on what's going on in the San Diego real estate market. So I really thought demand had peaked for the year. It literally said it all over the data. And then we had a 9% jump in demand over the last couple of weeks. So that's really interesting. We haven't had much fluctuation in interest rates. We're kind of right around the mid sixes. Things are not resolved with what's going on in Iran. I don't really have an answer for it other than I think there's just been a feeling from buyers in San Diego that it's not going to get worse, it's not going to get better. This is what it is, and now is the time to buy if you can afford it. And I think there's more and more buyers in this market that are realizing that they can, for the right price point, they can get in on a purchase. And so we're seeing that jump in demand. Inventory is still increasing, but that demand is kind of sucking up a lot of that inventory. So we're actually seeing some deviations in what we saw last year. So expected market time came down a few days, and we're definitely seeing a little bit of a hotter market over the last couple of weeks. More properties have multiple offers, especially if they're well priced. So believe it or not, 57% of homes either sold at asking or over the asking price in the last month. So that's a very strong data point that shows the strength of the market. And what does that actually mean? It's a big part of it is that sellers, as a contingent, are buying into the philosophy of pricing their homes more aggressively. This has been the way to market homes up in the Bay Area forever. They are way more aggressive with this mentality than we are down here. But there's been more and more sellers that are understanding, you know what, if I come on too high, it's just going to sit and I'm going to lose money in the end. I'm better on coming lower and then seeing if multiple interested buyers at the same time will cause me to end up with a really, really strong price. And more often than not, this is a very effective strategy. You can underprice it to the point where it becomes kind of silly, but if you get that nice sweet spot of in terms of looking at, buyers look in ranges of value, and so if you have a property that's like, I really wish I could get 1.1 million. Instead of putting it on at 1.1 million, you may want to put it on right at $1 million, because that actually puts way more eyeballs on your property, because buyers look in ranges of value. There's a lot of buyers that look up to $1 million, and there's a bunch of more buyers that look from $1 million to like $1.3 million. And so those kind of strategies is how you kind of win in this market. So again, it's not about predicting where your home is going to sell. It's about trying to ascertain what's going to get the most eyeballs on your property in the first couple of weeks. More often than not, that's how you get that quote unquote crazy price where your neighbors are going, I don't know how they got that price, right? A lot of it is the preparation. A lot of the things that we're seeing right now is that when you look at a property that sold for way higher than you thought, there's a lot that went into that behind the scenes. They didn't just snap their fingers and decide to come on the market. There was a lot of strategy, there was a lot of preparation to allow that outcome. So hope that was helpful, and I will talk to you on the next one.